So in this video, we're going to discuss how much housing you can actually afford based upon your income. And I have three example salary ranges for you guys today. So this is going to be someone making 40,000 a year, 80,000 a year, and 150,000 a year. And if we haven't met yet, my name is Ryan, and I've helped over 3,500 home buyers struggling with understanding exactly how much home they can comfortably afford over the last 19 years. And my promise to you is by the end of this video, you're going to have a simple breakdown of the key factors that you need to consider, things like your income, your debts, lifestyle choices. So if you're a home buyer and you're not sure what your true budget is yet, make sure to stick around to the end of the video. So let me get this out of the way up front. What you can actually get approved for on your home loan and what you should spend are two different numbers. So there are salespeople out there who want to encourage you to max out your budget so they can get a bigger commission check. But at the end of the day, you're the one that has to find a way to make that payment each and every month. Quick fun fact before we go too much further. The average down payment across the United States is 8% and not 20% like our parents told us it should be. The general scenario we're going to be working with is a conventional loan with 8% down. So there's going to be a PMI we're going to have to consider. We're also going to use 1.5% for the property taxes and $100 a month for the homeowner's insurance. And lastly, we're going to be using 7% based upon general current interest rates. Let's next discuss how a lender is actually going to calculate your income based upon $40,000 a year, $80,000 a year, and $150,000 a year. Now, this math works the same whether you have a single income household or a multi-income household. All right, so let's dive into one of the most important details when it comes to budgeting for your new home. Now, it's understanding the difference between gross income and net income. So you're probably asking, why does this even matter? Knowing this fact right here could make or break your home buying decisions, specifically when it comes to what you can afford on a monthly basis. So I recently worked with a couple who thought they had way more wiggle room in their budget just because they were focusing on their gross income. So once we factor their net income, they realized that they needed to adjust their purchase price way more to avoid being house poor. Now, it saved them from a potential financial nightmare down the road. So here's the deal. Gross income is the income that you have before your employer takes out taxes and deductions. And this is actually what mortgage people like myself look at first. But here's the problem with that. It doesn't actually reflect what you actually take home each month. That is your net income. And that's actually what's left after the taxes and insurance and other paycheck deductions. When you're planning for your mortgage payment, you want to focus on that net number because that's actually what you're going to use to pay the bills. Now, a good rule of thumb is to keep your monthly mortgage payment about 25% to 30% of your net income. Now, this helps you avoid overcommitting and helps keeps your budget flexible because if a refrigerator goes out or an animal gets hurt or you can't work for 2 months, that could cause a problem in not being able to pay your mortgage payment. But knowing your net income is just half the story. Next, we're going to talk about a number every single lender is looking at, and it's called your debt to income ratio. Did you know that 45% is the magic number that you need to stay under to get a home loan approval? You got to hang with me because I'm going to break all this down for you next. Trust me, this is a critical part of you getting approved for a home loan. All right, now let's go ahead and talk about the 45% debt to income ratio. Now, this is one of the most important numbers lenders look at when determining how much house you can actually afford and get approved for. Now, why is that? Because staying under this number right here is the threshold that can mean the difference between getting approved or getting denied for the house that you want. So how does the 45% debt to income ratio work? Now, let's break it down using the three different salary examples. And we're also going to add in a $50 a month credit card and a $300 a month car payment. All right. So for someone making about $40,000 per year, that's going to equate to about $3,333 per month. Okay. So 45% of that number. So we're going to take 45% times 3,333 equals about 1,500 per month. Okay, so after we take the 1,500 minus their credit card payment and then minus their car loan, we are left over with a total budget of about $1,150 per month. So for a $1,000 a year income, yeah, once again, that's an individual or household. Our budget that we have to work with for a house payment is $1,150 a month. And that includes, once again, all the monthly payments that you have, like credit card, student loans, car loans, other mortgages. That does not include things like your utilities, your water bill, your cell phone. Does not include any of that stuff. All right. So for the next example, if you were making 80,000 per year, that's going to equate to about $6,667 per month. Same formula as last time. So we're going to take the 6,667 times 0.45, and that's going to equate to about 3,000 a month per month. Okay. Now, if we take the $3,000 and then we subtract the $50 a month credit card, and then we subtract the $300 a month car payment, we are left with a budget for our mortgage of $2,650 per month. So $2,650 is for 80,000 per year. Now, I need you to excuse my handwriting. I understand my wife says my 3-year-old has a better handwriting than what I have. So I apologize. Finally, if you're making $150K per year, that's going to equate to about $12,500 per month. Same scenario as last time. We're going to take the $1,250 times 0.45 for the debt to income ratio maximum. So that's going to give you $5,625 per month for your total months for the total amount that you can spend per month on all of your debts, not payments, but debts. So we're going to take the $5,625 minus your $50 for your credit card, and then minus $300 for your car payment. Your monthly mortgage budget is going to be $5,275 per month. Now, in each scenario, the goal is to keep your total monthly payment, including your new mortgage payment, below that 45% limit. Now, this ensures that you are not outstretching what you can afford comfortably, and you can live in peace in your house. One of the cool things that I like about Zillow is they actually made an adjustment to their search filter. So they're going to calculate basically what payment could afford what houses. So in this example, we're going to be looking at in a monthly budget of about $1,150 a month, which matches our $40,000 a year salary. So if we're starting out on the West Coast, I found this house here in the Portland area that you can buy for about $65,000. Now, once again, this is probably not including everything. So the $426 or $462 a month is probably not including all of your principal, interest, taxes, and insurance. So this payment seems a little bit low, but it does seem like there are some homes available on the West Coast that you could be able to take a shot at. Now, like this one, they may not all be pretty, but that you got to start somewhere. So let's go ahead and take a look in my hometown, Columbus, Ohio. Let's see what we can find for the payment of $1,150 a month. Now, I used to live in Delaware, so let's see what we got here. So we have a modular home or mobile home. This one looks like it's in a park for about $95,000. You see here, downtown Columbus. You have more of a shotgun style house for $70,000. Once again, this payment seems a little bit low based upon maybe not having principal, interest, taxes, and insurance included. Let's do one more. And once again, another modular home. Let's look outside of town. Here's another house just based on a general search based upon that monthly payment of about $100,000. Now, this payment seems a little bit more accurate. It seems more relevant to the payments that I've seen for that purchase price. Okay, so let's go ahead and go to the East Coast to see what we can come up with. Let's check out Jersey. So in Jersey, for the purchase price we're looking at, we can find this lovely shack, I guess we can call it. We can also find, it looks to be a single family home. That's good. And this payment that does not seem to match the purchase price. So I would assume this is including property taxes, but I would also assume that property taxes in Jersey are going to be more expensive. So you can see that there is a kind of a general sense of what homes that you're going to be getting for that purchase price. All right, so let's go ahead and update our numbers here for the $80,000 a year. So going back to our calculations, that was about $2,600 a month, $2,650 to be specific. So this is going to be about as close as we're going to get based upon Zillow. So let's go back to the West Coast and see what we got this time. All right. So in California, for a payment of $2,600 a month, you can have this nice little cabin. See what else we can find. So kind of in the San Jose, San Francisco area. Ooh. So this is actually surprising because I know San Francisco is very expensive. This looks like to be a single family home for about 200. And once again, the payment may or may not be including the principal, interest, taxes, and insurance. And it's a shack. Here's another single family house. Now this is kind of more central Southern California. Once again, so you're getting better in price range for that salary. Let's go back to Columbus, where I'm from, and see there's a whole bunch more options now. So let's look in Powell. So in Powell, you can have a nice single family house. Now, Powell is a very expensive area if you're not familiar with it. So having a price point and a payment in Powell that matches this is actually a little surprising because Powell is one of the nicer areas in Columbus. So let's look downtown to see what we can come up with. Ooh, this is better. So this is a condo for sale. Now, the reason that the purchase price doesn't necessarily match the monthly payment is because there's probably going to be an HOA fee associated with that. Let's do one more in town. Let's go to the west side of Columbus. All right, so here we go. So here is another condo for sale. This one is a little bit more expensive, but the square footage is also higher. So it's a 3-bedroom, 3-bath. So you can see that your budget actually starts going up quite a bit and it opens up a lot more options the more income you have. All right, so let's go to New England somewhere, see what we can find. All right, so here is an 800 square foot house, about $220,000. This one is well below, about $600 below what our monthly budget was. Another single family house. This one looks to be kind of like a Cape Cod style, twice the size, relatively the same monthly payment. And then another shack in the Boston area. You could probably buy a condo, and this one's about 400 square feet, so that's not that big. So the last income scenario that we're going to talk about is $150,000. And if you remember, that payment was about $52.75 per month after the credit card, the car payment was taken out of the budget. So inside of Zillow, you can see here that there's really no $52.70. So we're just going to work with horseshoes here and just work with $5,000 to be conservative. So what I've done is I've added a filter to take out the smaller purchase price homes so we can kind of get a good range of what we're looking at here. So in California, you're going to be looking at a home really similar to this. So this payment is about $5,000 a month. Once again, it may or may not be including property taxes and insurance, but what you can see here, it's a nice house. Good hardwood floors, looks like it's been taken care of. So your budget opens up quite a bit once you hit that $150,000 a year range. Let's go take one last trip to Columbus to see what we're looking at here. So in the, Gahanna area. So you can see in Columbus, you can actually get a pretty big house for that budget. So this one's about 4,000 square feet. Once again, this is below the $5,200 a month, but once again, brick front, well, in good shape, nice sized yard, I would assume. And then, so your budget in Ohio will go really far. You can pretty much have the pick of the litter of what you're looking for in Columbus. All right, so let's go to the East Coast one last time, and then we can call this thing a day. So let's start in Philadelphia, see what we can come up with here. So in Philadelphia, for a monthly budget of about $5,200 a month, you can come up with a townhouse. Once again, Philadelphia is a big city, so you're probably going to have some big prices. So this one's about 2,000 square feet. It's probably going to also include a homeowners association due. You see here on the other side of the river. Here we go. Nice single family house, 2,000 square feet. Looks to be in pretty good shape, well taken care of. Looks really clean, actually. So I didn't mean to sound surprised. But what you can see here is with a budget of about $5,200 a month based upon $150,000 a year, you have a lot of options. Okay, so admittedly, that was a lot of information. And I really wanted to talk about something real quick before we move too much further. And this is probably on your mind right now. So what if you can't afford a home that you really want right now? Now, trust me, I get it. This is what I do every day. So I have to have these conversations quite often since home prices and interest rates have gone up over the last couple of years. And I get it. But here's the thing. Buying your first home is like breaking through a big barrier. It's really tough, but it gets so much easier once you get into that first house. So I'm in my 40s right now. And right now I'm living in my fourth house. Now, each time that we sold, we traded up for something that was just a little bit better, but it all started with our first house. Now, and get this, it was built in 1980 in a Rust Belt kind of town, and I'm still convinced that the house was haunted. Now, We didn't love much about it, but what the house got us is to where we are right now. And without it, we couldn't have worked our way up to where we wanted to be. So the reality is you may not get your dream home right out of the gate. And if you're looking at homes right now and thinking, wow, boomers just brought these houses for the price of a chicken dinner, and here I am struggling to try to figure this thing out. Well, what you don't know is boomers have had decades of owning homes and then trading up over and over again, which is why they are in the position that they're in right now. And the good news for you is you're about ready to start that journey for yourself. And the first house is always the hardest, but it opens up the most doors to so many future possibilities. Now, every home gets you a little bit closer to that dream house down the road. All right, so now that you have a clear picture of how much home that you can afford based upon income, based upon your debts and lifestyle and expenses, but here's the thing, figuring out your budget is just the start. So if you want to keep building upon what you just learned, the next video is going to be exactly what you need to keep things moving. Make sure to watch it all the way through, and it's going to take you further down the path to buying your next place.